All right, why don't we begin? Good day, everyone, and welcome. My name is Ron Quaranta, Chairman of the Wall Street Blockchain Alliance. Welcome to our second quarterly Wall Street Blockchain Alliance Brave New Coin Review. Couple of bit of housekeeping rules. This PowerPoint presentation in the session will be recorded. All attendees will be muted upon entry. We will have a Q&A session. We'll do that via Zoom, so if you do have questions, please send them through the chat box. I want to give our colleagues and friends at Brave New Coin an opportunity to go through their very extensive deck, and we will take it from there about 15 minutes before the end. I'm going to stop talking now and turn this session over to my dear friend and the chairman of our Crypto Asset Working Group, Mr. Jack Tatum.
Hey, Rob. Thank you very much, everyone, for joining us today on our quarterly review here with our friends from Brave New Coin. Many of you were involved the last time we did a quarterly review. We just went through a lot of great information from the Brave New Coin people. Today is going to be chock full of information, so I'm going to be very, very brief here. I know that we've opened this up to all the members. I just wanted to put a little bit of a plug in for the Crypto Asset Working Group.
Jack, I have to apologize. We were losing you, so I had to put you back on mute. I'm going to stop there. Jack, if we can pick you up towards the end, that'd be great. Again, apologies for that. I'm going to turn it over now to our friends from Brave New Coin. I think it's Josh that you're going to kick off?
Correct. Sounds good. Can you hear me okay?
I can. You can share your screen.
I wasn't sure if am I controlling it? I guess not.
You can share your screen from your end, unless you want me to do it, Josh.
Yeah, if you could, that'd be great. So a few things. I don't have a slide on this specifically, but in the United States, we've noticed a big regulatory tightening over the past few weeks. Not necessarily anything that's law yet, but there's definitely been a significant uptick in at least people who are paying attention to Bitcoin, crypto, Ethereum, ICOs, all this sort of thing. We had Trump coming out for the first time mentioning Bitcoin. We had Mnuchin. He's mentioned Bitcoin several times now in a negative light, mainly. I think Chairman Powell was actually more neutral. Obviously, the Libra hearings, several of them have been pretty bearish for Libra as far as the regulatory perspective. The senators or Congress people have all been particularly educated about crypto, which is kind of surprising, but it's good. The more people that know the stuff about crypto, the better. And aside from that, we've had other stuff, which is also, I think, greatly affecting price action currently. We had the CFTC come out and say that they're investigating BitMEX. We don't know in what capacity. We don't know how long this has been going on. We don't know what the penalties will be, if any. We don't know if BitMEX, who's located in Hong Kong, will fight any of this. The only reason I bring up BitMEX, it's a derivative platform. US traders aren't allowed to trade on the platform, aren't supposed to trade on the platform. I know for a fact that many US traders do trade on BitMEX through a VPN. Probably the most significant result would be mandatory KYC, which is currently not the case on BitMEX. So there's that. We have Binance removing US users after September 12th. We have Circle and Poloniex moving offshore very recently, a couple days ago. So all of this stuff just points to the regulatory tightening, like I was mentioning. It's no longer the wild, wild west. And over the past couple of days, we've seen the past week, just low volume, high volatility price action, very reminiscent of November through February, Q4 going into Q1 last year and this year. So that's all negative stuff. But on the positive side, we have TD Ameritrade, RSX, their product is coming and or live now. We have Backed, we have Fidelity. We also have CME Bitcoin options, which aren't necessarily in the press, but are readily available, apparently, based on the people in the know who I talked to about this sort of thing. And then on the way background, we've got the ETFs, which are due for a decision in August and October. So by the end of the year, the regulatory landscape should look a lot different. And one other thing I'll mention is another exchange similar to BitMEX called Deribit has seen a significant uptick in options volume recently. They also don't have mandatory KYC. So I can sort of see them being the next domino to fall as far as the US trading perspective. So that's enough about news and regulatory stuff. Let's look at this, the market caps real quick of what happened basically in Q2. So what we had, I think unless you're living under a rock, everybody sort of saw what happened. Bitcoin kind of stole the show. Certainly some of the altcoins did okay. I know last time we talked about sort of separating cryptocurrencies into certain baskets based on sector. I think it's probably better to look at it as a high market cap, mid market cap, and low market cap. They tend to correlate higher in that regard and less as far as like, privacy or Internet of Things or whatever. Those baskets are a little iffy to me. So just looking at the market caps, you can see that obviously Bitcoin sort of outperformed everything. And then the lower stuff, the XLM, Stellar, Tron, ADA, Cardano, and Monero did well, but not necessarily as well as Bitcoin did. Can we go to the next slide, please? Last time I was talking about quarterly price action and how, in general, Q2, Q4 has been better historically for Bitcoin. Q1, we tend to see cooling off from Q4. There's tax stuff there as well. Q3 is historically just been not as good as Q2 and Q4, and we're in Q3 right now. Bitcoin is down 6% on the quarter so far. We're only a month in now, but historically being down 10 to 40% until October 1st isn't exactly out of the question. There's certainly been more positive periods than negative periods, and you can see that mostly the extremely positive periods are followed by a negative period. So just more evidence that correlation isn't causation, but more evidence that Q3 would be negative. And we can go to the next slide. So there's lots of ways we can sort of skin the cat as far as technical analysis and where we are sort of in the macro trend, in some sort of trend channel. This is known as a pitchfork. It's kind of an overlay. If we look at basically the period between 2015 and late 2017, we were kind of range bound within this upward channel. This is a log chart, by the way. And we sort of returned, we went way above it. We went a little below it. We sort of returned back to the median of that pitchfork of that channel. So this kind of tells me that we're sort of where we're meant to be, and that the upside or the downside could be equally great at this point. Throughout any given trend, you tend to see price return to the median line like this over and over and over, just as it did from 2015 through 2017. You can go to the next slide. And here's another technical analysis. So the 200 EMA and the 50 EMA, that's a 200-day EMA and 50-day EMA. Green would be the 50-day EMA. The red is the 200-day EMA. And there's two things that sort of pop out. One, as soon as price jumped above that red line in April, it was off to the races. So that tells me Bitcoin is highly reactive to technical levels. I think a lot of people look at technicals because they either don't understand fundamentals or you just can't evaluate fundamentals properly. So I think more people in general who are looking at Bitcoin look at fundamentals. So that could be one reason. The second thing that pops out to me is as soon as we had the 5200 cross, which is known as a golden cross, that green star there, again, that was just significantly increase this bullish momentum we had last quarter. And then the last thing I'll say is that the 200 EMA is often, just like that median line on the pitchfork, the 200 EMA is often the price point at which price comes back frequently to retest or go back to the mean. So that tells me that we have additional downside. This is a few days old now. Sometime in near 7,500 would be the price point I'd be looking for as far as a mean reversion play. And we can go to the next slide, please. And always in the back of everyone's mind is the...
Let's hang on. I'm going to try to
Sure.
mute making that noise. Apologies.
I think that might be Lindsay.
Okay.
Okay. Always in the back of everyone's mind for Bitcoin is halving and supply, and that's coming up in 298 days on May 19th. And in general, what this is showing is, again, we're sort of within this channel throughout Bitcoin's history, 200% price appreciation a year, and that most of the significant price action happens after halving. So that would be after May 19th. So, everything that's happening now is kind of like the precursor, theoretically, based on what's happened in the past. And next slide, please. And this is just another way to look at the inflation or disinflationary aspects. Previous slide, there you go. Disinflationary aspects of Bitcoin. You can see as we get more and more supply, the inflation decreases in a stepwise fashion. And again, those steps are all the halving steps. So that's just another way of showing that halving is sort of coming up in another 300 days here. And next slide, please. And the CME, so this is the CME futures contract sort of mapped out on a price chart. And what we've noticed is that during these rollover periods, kind of 2 days before or 2 days after the CME contracts expire, there's been a lot of volatility, and we're seeing that in the past couple of days as well. So the 26th is tomorrow, and that's another contract expiration. So it's not unusual that we're seeing all this volatility just based on traders rotating out of positions, hedging going on, traders moving to the next contract, the July 29th contract, or the August 30th contract, or even the December 27th contract. We're actually seeing a lot of volume on that contract. What exactly that means, I'm not really sure. But other than traders on the CME are sort of taking a longer time frame trade versus on this upcoming contract, August 30th. Next slide, please. So I want to talk about some DeFi stuff a little bit. On the left of this chart are all the DeFi products, and they're sort of sorted by the amount of notional value that they contain. Maker being the most popular, Maker DAO. You essentially send ETH to the Maker DAO. It gives you DAI back through a collateralized debt product. And in general, what we're seeing is that there's been an uptick in money sent to and held by these DeFi products, especially throughout last quarter. Ethereum was up 103% last quarter, so not all of this is just like new ETH being sent, but it tells me that there's at least an uptick in interest and usage of these products. Now, most of these products are used most likely for trading. So to me, it sort of says everyone's sort of long ETH, and they can hedge their DAI, they can hedge on a few of these products. But in general, if ETH pulls back, like it has in the past couple of days, we kind of see this long squeeze. So just to compare, ETH Q3 is down 25% already versus Bitcoin down -6. So some of that to me is this DeFi stuff sort of unraveling a little bit. Some of these products also have automatic liquidations. If your maker CDP, for instance, isn't collateralized to a certain level, you just get liquidated, and then that gets sold on market. I think that sums up what I have.
Thanks, Josh.
Yeah.
So good afternoon, everyone. I'll take the next few slides to talk about Libra, which I guess has had the effect of both opening up the conversation around cryptocurrency, decentralization, but at the same time, I guess, as Josh mentioned at the head of the call, relit some of the regulatory concerns. So I guess where we're trying to come up with a house view at Brave New Coin on Libra is, what's its intended use case? What are some of the attributes that it's so far disclosed, and what do we see as being the next steps or future trajectory? So I guess at a high level, the view is that, if I can be somewhat simplistic, the fact that Libra has launched and it's Facebook, hey, this is great. It's got a lot more people talking about this asset class, about the potential for the technology, decentralization, et cetera, et cetera. So that's a good, that gets a tick from most people. Not so good, it's Facebook. And whether that's, to do with privacy issues, the hidden agenda potentially, and also whether this is just a preemptive attempt at some other development, or whether it's just testing regulations or whatever. So there's a bit of a question mark over that. Some would see that as a somewhat negative thing, but it's Facebook doing this and not someone else. But at a high level, we're seeing that it potentially provides some solutions around international and SME commerce. It provides alternatives to existing payment and clearing and settlement systems. It might even be an alternative source of credit if traditional sources dry up. It has some comparison with an IMF special drawing rights. And so therefore, I guess, because it's linked to a basket of fiat currencies, people have seen some similarities there. Not to overstate it though, I was at a conference this week in Australia, the Asia Pacific blockchain conference. There was a panel, it was the largest panel. I think there was 7 people on this one panel talking about stable coins and Libra. And the view was that even if, one of Facebook's intentions is to service the underbanked, particularly in emerging markets, that faces a couple of challenges. One, clearly in some markets, particularly in Asia, we have alternative payment platforms such as WeChat, Alipay, WeChat and WePay, and Alibaba and Alipay. So it's not going to be that easy for them to enter that market probably. In India, for example, the government has already created more of a public sector, government-owned payment layer and identification layer, the other piece that I guess fits into the Facebook solution. So it's going to be challenging there. And then specifically banking the unbanked, do these people actually have access to the technology or even a verifiable ID? So there's a question mark as to how effective that claim is going to be. And then at the micro perspective, there's clearly some similarities between the Libra Association and the governance of the Hedera Hashgraph project, which some of you may be familiar with. It's an open source, public, decentralized blockchain platform. Now, according to what we understand, Libra is going to start testing at around 1,000 transactions per second, whereas Hashgraph has already in test of around 10,000 transactions per second. So again, it questions what the ability of Libra is to scale, particularly if it's going to have a transactional ordering process built on proof of stake. And whether this is, part of Facebook and Libra's own agenda, or whether this will be part of a regulatory action, how easy will it be for Libra to stick to its centralization roadmap? A lot of discussion as well around the correlation, I suppose, between what we're seeing in the debt markets and interest rates. As Josh said, causation doesn't equal correlation, or vice versa. But I think it is interesting that we're now seeing some negative correlation between the Bitcoin price and US 10-year Treasury yields. And obviously, over time, we've seen gold and 10-year Treasuries have a similar negative correlation. Whether this correlation will continue in the case of Bitcoin and the Treasury yields, yet to be seen, but it suggests that Bitcoin is becoming more of a safe haven asset. And just to emphasize that, some chart using our Bitcoin liquid index and the 10-year Treasury rates, you can see that, in recent times, as Bitcoin has achieved higher all-time highs, or higher recent highs, the Treasury yields have gone down and vice versa. So it is only a relatively short period, but it's of interest, and I think this is something that will continue to engage not only the Bitcoin and crypto community, but obviously economists, central banks, and other participants in the monetary system. So how could it in theory work? So for corporations, it's potentially as an alternative payment system and transfer system could protect corporations negatively impacted by trade war disputes. It could protect the Libra Association members themselves from decentralization disruption, and potentially it drives new revenue stream and influence from consumer spending. For SMEs, it could result in cheaper payment and transaction fees compared to credit cards and other point-of-sale systems. And they could earn a portion of their transaction fees back as rewards. And I guess as part of Facebook's agenda, they're going to make it easier for companies and advertisers to integrate their sales activities with Facebook's platform and advertising media. For consumers, as I said, it does, provide an alternative or competitor perhaps to WePay and Alipay services as a source of cheap remittance. And it may be that Libra itself allows for decentralized or other applications to allow for cheaper credit or interest rates and discounts. Interestingly, at the conference I mentioned this week, there was a representative of one of the major banks in Australia who'd been doing some internal testing with their own native cryptocurrency just amongst their staff. And the one thing that they identified as being a key feature was the ability to earn rewards. I think one of the things that, so for everyday payments, the fact that you're getting rewards, it made it more attractive maybe to be using this native currency. I guess one of the things though that this panel also said, on the one hand, Libra has the effect of becoming the hotmail for crypto. So, 20 years ago, when we all got onto the internet, it was only the likes of Hotmail or America Online that made it easier, particularly for our parents' generation, to get online. Is Libra doing the same for crypto? But on the downside, do retail consumers, if they engage with Libra, do they realize the potential FX risk they're taking on because of the underlying basket of currencies? And secondly, just how easy will it be to pay for your morning cup of coffee with Libra? Just taking another look, how does Libra stack up to what might be defined as supranational money design? So certainly doesn't have all the features of what we consider to be the requirements or attributes of a truly decentralized supranational money system, but clearly it has a number of them. And I guess there's still some questions there around how far protection of holders in the event of bankruptcy, and clearly there's some, I guess, going to be some question as to how resilient Libra would be to political instability. So what's next? Obviously, there may be other similar stable coins and SDRs to follow. Clearly, there are some other, not exactly equivalent, but comparable projects out there. So Terra for e-commerce in Asia, which has already launched its mainnet. Saga, which is a central bank-inspired solution featuring a team of Nobel economic laureates. There's the JP Morgan coin, which, although it's just going to be, or intended to be, an internal settlement facility for JP Morgan's clients, it could potentially be used as an interbank payment facility. Hedera Hashgraph, I mentioned earlier. The concept of Libra, the Libra Association, could see the rise of more corporate governance models. We've talked a little bit ourselves at Brave New Coin recently about decentralization and DAO type models on traditional corporate structures. Libra could follow, given its base in Switzerland, an NGO model. But at the same time, we potentially expect Libra will have to concede decentralization to regulators, particularly around KYC, AML, CTF, etc. And then, in a negative interest rate environment, does the Calibra wallet provide some relief to, particularly in the US and EU markets there? So that's probably all we wanted to say on Libra. I'll hand over to my colleague, Pierre. Pierre, are you going to share from your computer?
Yeah, I'm going to do that.
Okay, so I'll just exit. If I can do that.
I think we're already looking at Pierre's deck.
Okay.
Oh, cool.
Oh, no, I think I'm still sharing. One sec.
Yeah. Hi, everyone. Good afternoon. So, yeah, my name is Pierre, and today I'm gonna talk about two topics, fake volume and another look of ICO and IO.
Pierre, you stopped sharing your screen.
Good.
No, you stopped. Sorry.
Can you see my screen now?
We are looking at
yes. No, we're looking at yours, hopefully.
Yep.
Okay. So you can see my screen, right?
Yes.
Good. So fake volume is a really interesting topic. I guess you've all heard about that, and you might have also read some article around the topic. There are two main types of fake volume. The first one is you are an exchange, and whatever is happening on your exchange, you're publishing fake data through your API. So every data aggregator is connected to your API and is getting the data that you are creating out of nothing. The other type is in your platform, you are incentivizing trade mining or wash trading by changing the fee structure or giving fee incentive to user to create a massive amount of volume inside the platform. So the reason for an exchange to do that are really simple. By doing some operation of their volume, they basically increase their visibility on data aggregator and on some popular website. And from this website, they are getting a lot of referral traffic. So people are attracted by this high ranking in any website, and so they are going to this platform and then start doing real trading. And so from this real trading, the exchanges are obviously getting fees, because that's a direct benefit for them. And by increasing their real volume, they will increase even higher their ranking on the data aggregator. And the direct consequence is that more coins or more projects will ask to be listed on this exchange. And so they can also increase the fees that they are getting for listing new assets. So on the exchange side, it's quite simple. I'll just share with you an example that we had recently, which was Big One. So Big One exchange started to do some trade mining operation. So they released their own coin, and they offered to repay traders with their own coin where they were trading on their platform. So people massively started to trade on so the pair you're looking at is BTC USDT. And so you can see a massive increase of volume when they started the trade mining. And then the incentive slowly decreased because the exchange cannot support so much fee level for a long period of time. So they gradually decrease the incentive. And so that's why the volume decreased gradually. So all of this fake volume is really damageable for us for the price discovery, because we are supposed to use a volume weighted methodology. And so by using fake volume data, then we cannot have a fair price. On the project side, again, the rationale is quite simple. Once the ICO is completed, the main goal of the coin is to become popular and to attract new investors and to create some hype around the project. So the best way to do that is to first get listed on at least 2 exchanges, which is a minimum criteria to be listed on many platforms. And so they decide to go generally with like small and unknown exchanges that have very low criteria for listing. Once they are on exchanges, now they have to create artificially this volume to appear in a high rank position. And so they generally use the services of market makers. So recently, one market maker went public and disclosed his prices. So he was charging 15K to get listed on the second page on CoinMarketCap. So that's the type of services that projects are prepared to pay to attract new investors. And once the market and the 2 exchange criteria are ticked, then you can ask to be listed on a data aggregator. So again, us as a data company, our role is to make sure the volumes that we are reporting and the projects that we are showing are not based on fake volume, and it's therefore very important for us to come up with a methodology to distinguish fake volume, fake volume for true volume, because it's obscuring market data. So to reduce the impact of fake volume, there are multiple methodologies. The first one is to just draw a line in sand and decide that this exchange looks legit and this one look dodgy. And recently, a methodology came up and decided that 95% of the volume was fake volume and only 5% was legit. So our view of the world is a bit more balanced, and we believe that there are actually a lot of exchanges that are doing a bit of fake volume and a lot of exchanges that are doing a huge proportion of fake volume. So our view is more like some exchanges are really 95% fake volume at least, and they are not afraid of rewriting the tape or publishing fake data. Some exchanges on the other side are really not allowing fake volume or doing a lot of regulation to avoid that. And in the middle, there is this high number of exchanges that are between 95 and 5% of fake volume. So the best way to analyze and to identify fake volume is to analyze trade data and order book, so level 1 and level 2 data. And so one simple test that we can do is to evaluate the time interval between trades. So we choose an exchange, we choose a pair, and we collect all the data, and then we analyze what is the interval of time between trades. So on what we call a reliable exchange, so Kraken or Bitstamp, we can see that there is a uniform kind of curve, and a lot of trades are happening in a very short period of time, and then it's mostly decreasing. On some other exchanges, like if you see X-Rate on the bottom, they have a huge amount of trade happening quite fast, and then around 700 seconds, they have a spike of trades, which is for us, which is a sign of a boat posting trades of the same size, by the way, every 10 minutes roughly. And so seeing that, it's easy for us to identify that this exchange is not publishing only reliable data. And so we have to make some calculation to identify which part of the volume we can trust. Same with Coinbase and IDAX. We can see from the trade interval distribution that we are not looking at a uniform curve. And so we have to come up with methodologies to reduce the impact of this volume. Another analysis that we can perform is, again, on the trade distribution, but this time we are looking at the size. So for each price, what is the number of trade that has happened in, let's say, 24 hours? So in this case, when you look at the Ripple to USD pair, you can see on an exchange like Bitstamp, Kraken, or Bitfinex that, again, we expect to see a lot of small trades and decrease smoothly when you come to higher volume. Obviously, you can sometimes see some spike around some round numbers because humans like to trade a round number of Ripple more than a 20 decimal size of a trade. If you look at the bottom and you look at X-Rate or IDAX again, you can see that there is gaps, there is a lot of missing size of trade, which is for us a warning sign of this exchange doesn't look like a reliable exchange, and they might do a few or a lot of fake volume. And the problem of doing this kind of analysis across all the exchange is that you have to integrate all the trade history and the order book as well, because we are also doing some analysis on order book to trade data. And so because it's quite exhaustive and it's taking a lot of time, sometimes we have to come up with some lighter methodology, which is just looking at the ticker data. So last price, best bid, best ask. And for example, on this chart, you can see for each exchange, we have chosen 30 or 40 pairs, and we are looking at for the average volume of this pair, what is the spread? So on an exchange like Bitfinex, you can see that for the largest volume pair, on the middle of the chart, you can see that the spread is really small. On an exchange like Bitmat or X-Rate, for the largest volume, you still have a very massive spread, which is not a normal behavior. So by doing this kind of analysis, especially if you look at the bottom right, so Helix. So Helix is our most reliable constituent. They all have a very small spread for this market because on these exchanges, you have a lot of accredited investor playing with a substantial amount of money, and the spread is therefore very small. So by doing this kind of analysis, we can already draw a small line in sand between exchange that we don't need to really investigate a bit further, and exchange that needs to be looked more precisely and need to have some form of order book and trade data analysis. So now we'll move to the other part around ICO and IO. So I guess you've all known what ICO was. So initial coin offering, which was the most popular way of raising money in the crypto industry in the previous 2 years. And this year came this new, I mean, it was already existing last year, but the rise of IO, which is the initial exchange offering, which is instead of being completely open, the coin offering is managed by an exchange, which is in charge of the KYC and the distribution of the token. So let's start with just an overview. So here you can see the number of projects and comparing that with our large cap index, which is the top 5 assets. So even if we have heard that 2017 was the year of ICOs, we can see that in 2018, there was still a lot of projects raising money through ICO. They've not all been really successful, but we'll see that just after. In 2019, ICOs was almost gone. Everything was done through exchanges. And interesting is that it's following partially the market cap of the main popular assets. So when the price of Bitcoin is up, the people want to raise money through this kind of vehicles. When I look at the sector picture, we can see that financial services and blockchain infrastructure are really where all the projects, most of the projects are concentrated. So financial services can be partially explained because a lot of exchanges have created and raised their own token. So Huobi, for example, Bitfinex recently, and Gate.io. So this was tokens used for the traders inside the platform. And a lot of financial services have been also trying to raise funds to create products for financial stakeholders as well. And blockchain infrastructure is just inherent to this industry. So a lot of new projects are trying to disrupt Bitcoin by creating a new type of chain or a new type of blockchain that will have more interest, more properties than Bitcoin and Ethereum themselves. So I will now move to the interesting part, the return on investment. So if you look at the ICOs that raised money in 2018, the picture is not really great. We have more than 200 projects that now have ROI of more than 80% loss. So this is if you bought the token at the ICO IO price, and if you had kept that till last week. So most of the projects have a negative return, and very few of them actually had been successful last year. This year, the picture is a bit more balanced. We still have a huge proportion of the projects that had a negative return, but we also had seen some successful projects recently. Some of them have been really popular and raised a lot of attention, growing in market cap. So definitely it looks like the IEO is a bit more, is a bit less risky than ICO, even if the level of risk is still very high. So to limit a bit this level of risk, it's good to look at one angle, which is the platform. So which platform has backed this project? So the picture here is by exchange that raised money through IEO, and you can see in orange the number of projects, and the number in black is the amount that raised. So Bitfinex, for example, raised $1 billion recently, which was massive. For the other one, the number are not that huge, but still quite interesting to look at. And so you can see that some exchanges have been way more successful in the way they've chosen token. ZBG, for example, has backed 6 projects this year, and the return, the average return for all of them is more than 2,000%. Same with Binance, they have been choosing their project really wisely. On the other side of the spectrum, you have some exchanges that didn't look carefully which projects they were backing, and therefore the return doesn't look that great. So Robinhood and XMarket and B4X, all of these platforms have backed 3-4 projects, and the return are not really great. So that's another thing I wanted to discuss as well, is how to limit the risk. And here you can see one of the methodologies that we are using at Brave New Coin, which is to compare alternative data and try to identify risk profile for certain company. So what you have here is based on data we are collecting around the development community. So we are collecting different data points to assess how much development have been happening in a certain project, and we are trying to find which of these metrics is showing the best result when you overlay that with price. So for us, the methodology is to collect different type of data on multiple scope of a project, and to then try to identify how we could correlate that with risk and price to create alpha. So to conclude, I will just summarize that and rephrase that. We are trying to collect a lot of different information about this industry, and the goal for us is to help people understand it a bit more. So fake volume analysis, for example, is to help people not being fooled by fake volume on exchanges and projects, but as well collecting data on physical events or social listening is another way for us to help people understand how they could play a role in this industry, how they could identify the best project. I think that's it for me. Thank you.
So thank you, Pierre. Thank you, everyone. I know, Jack, you're unmuted. For those of you who are on the call, if you want to start submitting questions, we're going to finish a bit earlier than we allocated. We just want to make sure we always allow for a lot of time. And I'd actually like to kick it off with a real quick question to our friends at Brave New Coin, if you don't mind. And I think, Rory, this one might be for you. Real quickly, you had mentioned in part of the Libra conversation, international demand for non-sovereign. And it's interesting because I'm probably messing this up, but I had thought I had seen recently that something on the order of $12 trillion in sovereign is now negative yield. Is that part of that international demand, or do you and the BNC team have a different perspective?
So I think what you're referring to is the negative yield on the I think is it the top tranche investment grade bonds, sovereign bonds. So I think it's more a question of where are people finding yield, and so Bitcoin isn't necessarily, I suppose, a source of yield as such, because it's not a dividend or income yielding asset unless you're using it in a collateralized way against other assets. You know, it's a store of value primarily. I think what we're trying to understand is, you know, is Libra something that is a symptom of that search for alternative payment and settlement systems, or is it going to create further demand? And I think that's still to be determined. I think if you also look at the impact that the lever it's having on the regulatory space, that's probably more interesting for the central bankers and the reserve bankers. I'll go back to my example of the conference I was at this week. In the audience was a representative from the Australian Treasury, our central bank, our finance ministry rather, and this delegate said that this was the third or fourth panel or discussion on Libra that she had attended in this month. So clearly it's getting the attention of not just market participants, but the regulators, central banks, and the monetary policy authorities. What it all means, I'm not sure. I think we're still at early days, but it's clearly proven to be a bit of a catalyst one way or the other.
Great, thank you.
Ron?
Yep, we can hear you. Go ahead, Jack.
Okay, great. That was terrific. Had a couple of people just were curious about the IEO. Would it be possible to explain the process that you've seen for these IEOs? Who handles it? How can people buy it? How are people buying into that? And maybe some of the examples that you've seen. I know you've gone through some of the exchanges, but just a little bit more around what IEO is.
Yeah, I'll talk to that. So effectively, the exchanges are opening up their platforms for these this form of raise, but clearly they're applying mostly their own criteria in terms of what qualifies, who can participate, they're setting fees and other expectations, etc. Now, at this stage, there isn't a single model in the sense that each exchange will have its own criteria. There's been some confusion historically, though, around what exchanges can mandate in terms of requirements, because I understand that if an exchange imposes so-called listing rules, that may raise the expectation or the likelihood that they need to be a regulated exchange. I'm not the expert on that, but that's some of the conversation. But clearly the exchanges themselves are saying, okay, well, we want to attract more business. So they're effectively opening up their platform for these new issuance or capital raises. But then they're putting these criteria in places, and it's up to the projects or their sponsors to engage with the exchanges to fulfill all the criteria, in some cases to pay fees and I guess some form of deposits or whatever to participate. And then there's going to be further agreement between the parties as to who markets or promotes these events and how they're then distributed into the market. But they're largely almost like an on-market book build. I guess that's the way I would describe them if you're talking sort of equity markets. So there's expressions of interest, there's a solicitation, and then the order gets filled. Who's on the hook for underwriting them, I guess depends on the nature of the sale and who's facilitating it and which exchange. But basically they are driven, if that's the right term, by the exchanges, because they're the ones that are the gatekeepers in terms of access to that platform.
Okay, great.
And one point to add is obviously each exchange can do something from various type of sale, like they can do private sale or completely open sale. But one of the benefit of the project is that they will be listed on this exchange directly, so they don't have to raise money and then try to get listed on exchanges in a second time.
So are we seeing the end of ICOs, or are you still seeing a lot of ICOs being created?
No, I think that well has pretty much dried up. probably have seen less than a dozen, I think, potentially this year in terms of potential new deals. We have an advisory team that review deal flow. I don't think they've had one, I'm not sure this is the right term, but they haven't had one bona fide ICO deal come to them. Most of the deals now are looking more at an IEO or are doing a more of a direct equity raise or looking at options around a security type token. And as you're probably aware, there are a number of platforms now that have the ability to issue and list these sorts of products, but they're still relatively few and far between. And some are just going through sort of Reg A plus, Reg S, Reg F models, basically. And they may not even get listed on a so-called traditional crypto exchange. They may be looking at listings on other alternative exchanges.
You're referencing like Blockstack, for example.
Yeah, and there's other projects which are now looking to go through that Reg S, Reg F model, basically. So they may be some sort of private placement or semi-private placement or on an alternative bourse, basically.
Let me just add one thing to that too. There's kind of a more insidious reason to get these IEOs going on these exchanges, especially exchanges that have their own token, like Binance has BNB, Huobi, OKCoin has OKB. So what they'll do is they'll force you to buy these exchange tokens to participate in the IEO, which it's their right, that's fine. But at the end of the day, what that does is have this sort of artificial demand on their own token, on their own exchange token, and then price goes up accordingly. And then in Binance's case, they even force some of these IEOs to migrate to the Binance chain, so then they have further control and have further fees on these IEOs. And like Pierre said, the IEO gets automatically listed on the exchange, so that's good for the IEO. And from the exchange perspective, they're soaking fees from the IEO issuer, they're soaking fees from the users through transactions, and they're pumping their own coin that they made for their exchange. So I expect to see more IEOs than anything else, definitely.
I do want to address a couple of, thank you, Josh. I want to address a couple of questions that have come in via chat. One of them is interesting. So David had asked, and collectively across the BNC group, what would be the catalyst for a rally in the small and mid-cap altcoins? And we keep hearing that referenced, but I'd be interested in what your thoughts are. What is that catalyst? And is Libra adoption in 2020 part of that, maybe?
Well, I'll just go first and say, like I said in the beginning, with Poloniex moving offshore, Binance removing US users, most of the volume in crypto is US based, at least data that I see. So to continually kick US people off altcoin exchanges is certainly bearish for alts in general across the board. Another thing I'll say, Coinbase had a basket index where users could buy the top 5 alts, including Bitcoin. I think it was at least 5. But they recently removed that option as well. That isn't to say users can't go on Coinbase and buy these alts outright, but it just speaks to the performance of the basket. It just was down significantly over the past year. So to me, I don't see any catalysts in the near term for any of these altcoins to sort of perform well. I see more of the inverse, especially with the financial institutional products that are coming surrounding Bitcoin specifically, and not necessarily altcoins.
Great, thank you. Anything else from BNC team on that question? I do have a couple more obviously coming in through the chat as well.
I guess the only observation I would make is that, you know, these projects, particularly altcoin projects, need to deliver on the promises they made in terms of building or releasing products and services. I'm not saying that's going to be the catalyst, but I think you know, there has to be some development there in terms of what their original objectives were and realizing those objectives. But hey, that's just a personal view.
Thank you. A couple more questions real quickly, and I have to confess to having total ignorance about this, but someone in the membership is asking if we had any thoughts on Bermuda ICOs. And I'll be honest, I have no idea, but I'll leave that to the professionals.
I personally haven't heard too much about them. The only Bermuda connection I could make was that I think Poloniex Circle is sort of migrating their business to Bermuda. Mm-hmm. I know Bermuda is more friendly from a regulatory perspective. Yeah. They're more like the Swiss or the Singapore contingent, where they're sort of welcoming to ICOs in general.
Yeah, they certainly had a presence at Blockchain Week in New York, didn't they? There were a lot of Bermuda shorts.
Yeah.
And as I understand, hundreds of funds have now incorporated in Bermuda, if I remember correctly.
Well, look, I mean, it's as Josh said, it's not one that we've specifically heard a great deal about, but it's comparable to what we've seen in Gibraltar, Malta, and a few other European jurisdictions that are trying to be crypto friendly. It's part of a trend or a theme, I guess. I wouldn't place any more or less significance on it than that in vis-a-vis Bermuda, except that obviously Bermuda has been an offshore banking and financial services center for many, many years. Maybe they're just trying to get a piece of the action.
Yeah. Go ahead, Jack.
Recently saw a story related to...
I think we're losing you again, buddy.
Oh. Related to
I am sorry, Jack. If you want to text the question, I'll read it out to him. Unless you guys were hearing it, was very difficult to hear, Jack. My apologies, Jack. For our BNC friends, one more question I've got here is, can you guys speak to you probably have seen it stateside, certainly the banking lobby attempt to prevent large technology companies from the finance sector. And we have these conversations with regulators and legislators. Certainly, I'd be interested in your perspective in that, our friend Gary Boomer as well. And what are the international perspectives on that also?
Well, I guess if you look at someone like China, tech companies have become finance companies. I mean, obviously there's been some pushback at various times on these alternative payment methods, but now they've become mainstream. I mean, I was just in Tokyo last week, and at the airport duty-free shop, there were a lot of mainland Chinese tourists, and they were all playing with their Alipay or WePay applications on their smartphones. So that battle might be lost. Interestingly, we come back to Libra for a second. I'm always struck by a comment that Zuckerberg made a few years ago when he said he wanted Facebook to be the world's newspaper, where you would go for your daily news, people would share news. And so that raised the question. So, you know, in most countries, newspapers are a regulated form of mass media. Does that mean Facebook wanted to be regulated as a newspaper? Oh, no, we only sell adverts. The same thing is happening around Libra. Eventually, this will look like some form of deposit-taking institution. Therefore, at very least, it will need some sort of banking or financial services license. Now, how you can stop tech companies participating in financial services, if they're willing to comply with the regulations, then I think that's probably a battle that they're not going to win. Alternatively, we're seeing more and more financial institutions, as they face disruption from new technology, becoming more like technology players. So I guess it's just a shift we're going through at the moment, and everyone's trying to protect their turf.
Great, understood. And again, I'm sorry we lost Jack. He was busy boarding the yacht, so hopefully he can type in a question or two. I want to add.
Heading off to Bermuda already? Oh, right.
Well, we mentioned Bermuda, and he had some business to attend to. I do want to add one more question, and certainly for everyone who's on Zoom, please answer your questions by chat as well. I don't know if it was alluded to earlier, but I'd be interested in the collective BNC opinion on Ripple XRPs. particularly, and if I read correctly, they dumped something on the order of 1 billion Ripple onto the marketplace. What are your thoughts and what's the perspective on impact that might have for the broader ecosystem of cryptocurrencies?
Yeah, so Ripple, the company, holds at least, I don't know what it is. It's like, I'm not going to.
A lot.
It's a lot. So they own, I don't know, 10%, whatever. Specifically them, the company. And then they have this escrow system that they also benefit from the sales. So it's technically theirs, that holds like 60% of Ripple. So they say that they programmatically sell X amount of Ripple every month. X amount of Ripple comes out of escrow for sale every month. And then if it's not sold, it goes back into escrow. So it isn't necessarily dumped on the open market. But they do sell their own holdings. Ripple, the company, sells their own Ripple, the token, holdings on the open market. Yeah, I mean, it's problematic for people who don't think that Ripple is a centralized entity, Ripple the token, Ripple the company. They have a couple pending court cases regarding centralization, regarding being an unregistered security in the US. There may be more worldwide that I don't know about, but those are pending. I know Rory just saw some bit of news yesterday. He can talk about it in regards to some nodes being publicly available. I don't know. I mean, to me, everything they do is all about trying to sort of confuse and obscure the fact that they are Ripple the token, they are Ripple the company. They're sort of one and the same. But anyway, go ahead, Rory.
Yeah, so I guess as part of a wider remit, the SEC had put out an RFI, request for interest or information on accessing or running or having the ability to access nodes on all core chains so they could monitor transaction activity as part of some sort of surveillance thing. I mean, it's not dissimilar to what we see in some of the other asset classes and capital markets where there's consolidated tape or something like that. And then there's, I think Ripple did publish its quarterly report around its liquidation strategy, which is linked to trading volumes in the previous quarter. And they're trying to bring more transparency, I guess, to that process. Yeah, I think there's still some way to go there with both the process and understanding of what that mechanism is, not just how it works, but how they actually execute it, basically.
Right. Thank you. So Jack on the yacht was able to send in a question. Let me read it for you guys. Question: yesterday, an investment firm in Canada had a public hearing with the Ontario Securities Commission to get approval for their Bitcoin ETF, which would and could be the first regulated ETF available. Do you at BNC have a sense that we're getting closer to that globally available Bitcoin ETF? And at this point, does it matter? We've been talking about it for years.
I feel it's always 2 steps forward, 1 step back, maybe sometimes 3 steps back, because with these multiple applications that some of these projects have made, it's almost like a war of attrition. How many more times do I have to fulfill or submit and file, and then it only gets knocked back on some other pretext? It's not a matter of if, it's a matter of when these instruments will be available. We've done quite a bit of work on this in the sense that as an index house, we can create, much to Josh's distaste, I'm sure, we can create basket indices because as a traditional ETF, you're looking for diversification, you're looking to execute on some investment strategy or theme, and therefore that's achievable sometimes through diversified portfolio. So they will happen. The other reason they need to happen is it's another way that's going to bring institutional money, such as pension funds, into the market. And eventually they will be, further sliced and diced into retail and further distributed products. So yeah, they're going to happen. challenges or the questions that appear to be the ones that challenge the regulators are: how are the underlying assets being held, traded, and also in physical custody? What's the mechanism for rebalancing that portfolio? Like, how are you going to deal with things like hard forks? Is that equivalent of a stock split or something? And how does your fund process those corporate action type events? And then I guess the third one is, what are they being indexed or benchmarked against? And obviously in Europe, with the whole EU BMR regime coming in, if you want to distribute an ETF product that's referencing an index as its performance benchmark, then you've probably got to also get that benchmark compliant. And there's also obviously other factors around which jurisdiction in Europe does that then give you passport access to the rest of, say, the EU. So to summarize, they're definitely going to happen. I was going to have a bet that Europe might produce the first fully compliant ETF, but maybe Canada will get there first. We've also seen some interest in parts of Asia Pacific, but it all comes down to the structuring and the benchmarking of these products, because they've still got to show enough attraction compared to just holding direct or trading in the cash markets, basically.
Let me just add to that real quick. So there are several ETNs in Europe already. We have the GBTC product in the US, which isn't Bitcoin or Ethereum directly, but indirectly. And the two biggest things that sort of were mentioned in the previous ETF denials were concerns about BitMEX and concerns about Tether. One thing I didn't mention in the beginning was Bitfinex is currently sort of embroiled in court with the New York AG regarding allowing US people to use Tether on their exchange or not, whether or not Tether is fully backed, all this stuff going on. So in the near term, as traders, watching two of the highest volume exchanges get targeted by regulations is not a good sign. However, should BitMEX and Bitfinex be quote unquote cleaned up in some way, I think that would pave the way for an ETF in the US in a positive fashion. So it's kind of like, it's good and bad. Anyway.
Well, I'll note that I have not an insignificant number of colleagues who find it, Josh, a little bit ironic that not long after the author Nuro Rubini fight, as it were, at a conference, there's immediately this news of the AG investigation, and obviously, to your point, we'll see where all of that goes. It's been pretty a lot of mayhem lately in that space. I do want to raise one more thing that I'm pretty sure my friend Jack will tell me is getting a bit off topic, but you also, our friends at BNC, you have quite a footprint across Asia Pacific. So not long ago, it was widely reported that our Justin Sun and the Tron folks had bid at, and you guys probably know better than we do, something like $5 million for lunch with Warren Buffett, and that was widely publicized and hyped, and it was considered great for the broader crypto world. And then it imploded, and it immediately became, this is terrible for the crypto world. With feet on the ground there, do you guys have any perspective? And again, we have no vested interest in any of that, and I know a lot of colleagues feel that Tron's a scam. I personally don't know enough about it, but I'd be interested in the ear to the ground perspective you have.
Sure, I'll go first.
Don't hold back, Josh.
So no, I agree that it's a big hype machine. Justin himself has sort of proven all of that, whether it be through whatever allegation you want to throw at him, how he got X amount of money regarding the raise for Tron, whatever, I don't know. I think at the end of the day, he's achieved what he needed to from his perspective, that he sort of got all these headlines. He got on Bloomberg, he got on, every business publication imaginable. So I think the lunch, even if it doesn't happen, it sort of paid for itself. He's now
In free publicity, yeah.
Exactly, yeah. So, but he's now seeing blowback from China regarding how his money was raised, how he hasn't paid taxes or evaded taxes, and you know, he's seeing a lot of consequences from being so public. So, yeah, I don't think in the grand scheme of things it matters that much. But if it does happen, great. You know, it's positive for crypto, sure. I think Buffett's relieved if it doesn't happen. But what Justin was doing, to his credit, he was bringing other people into the fold to the lunch. So he was bringing in Jeremy Allaire, the head of Circle. I think the head of Litecoin, his name escapes me, was also attending. So it's not all bad. I don't see how Buffett's going to change his opinion on anything, though. So that's
you meant Charlie Lee, right?
Charlie Lee, yeah.
I guess the only other observation I make, and this is not to be flippant, it wasn't clear, certainly at the conference I was at this week, whether the lunch had been cancelled or postponed. People were even picking up on the semantics of that.
Yeah, and we've gotten not a few people emailing us saying, what do we think? And I just punted on a lot of those. So we only have a few minutes left. I know we booked this until 6 p.m. Eastern time. I do have one last question. I guess it's more of a prediction, and again, a little bit off topic, but a good one. Will we discover who Satoshi is this year or next? And I suspect someone wants to mention the name Craig Wright, but I'm going to stop there and leave it to Josh and Rory and Pierre.
Well, we're seeing more and more stories of seemingly random individuals that no one's ever heard of in the big picture come as like being pointed to as this is Satoshi. Most of us in the community don't really care who it is, so it's not like any of us are actively seeking it out. Right. Most of us also are pretty sure it's not Craig Wright. If you've been following the Craig Wright legal saga at all, he's just completely sort of self-owned himself in court several times. So he certainly hasn't helped himself in that regard. Yeah, I don't know. I think most of us just don't care. I think a lot of people who aren't in crypto care more than the people who are in crypto.
Yeah, I choose my words carefully, given that this is quite a litigious topic. Whether or not Mr. Wright is Mr. Satoshi is in somewhat a moot point. I think for what I understand the situation, there's more debate around claiming patents over certain white papers, perhaps.
Great. Well, thank you, gentlemen. I think that rounds out the questions we've got. Certainly, we'll be getting them from our members going forward. So on behalf of myself, on behalf of Jack, on behalf certainly of the broader member base, Rory, Pierre, Josh, it's really a pleasure. Appreciate everything you've done here. Appreciate all of your time. Looking forward to the next quarterly. And we will certainly make this recording available in the coming few days as well. Any questions, please reach out to us directly. Rory, also, as you're aware, we also have a partner Slack channel. So for our members who might want to reach out to you directly, we'll enable that as well. And thank you very much. Really do appreciate it. Terrific.
Thanks, Ron. Thanks, Jack, for hosting us. And thanks for everyone who dialed in today. We'll speak again soon. Thanks.
Cheers.